And we're live. Boom, there's my face. Welcome to Wavecast number 14. Just like the last episode last week, this is going to be another demonstration of production perfection. What you're about to witness is a stream that is so devoid of all technical issues. You're going to be amazed, impressed, and kind of, So let me go over to the stream so I can see you guys in the chat. So yeah, so Martin's here. He's like off camera. He's actually arrived. He's flown because I'm in Poland and he's flown in literally today. This is why we had to delay it a couple of hours so that he wasn't just bowling in the middle of a stream. So hey Marcus, hey Murray, hey Tony, hey Raphael, Kaz, haven't seen you in a while. Barry's here, Jeffrey. So I've got something interesting to show you guys today. Something I kind of, as you know, I'm working on the course, so I'm not spending epic amounts of times on the charts. But I was looking at the charts today, just kind of trying to get a sense of what was going on, and I had an idea that I want to share with you, a hypothesis for what I think might be happening with Bitcoin and what might happen over the next. Well, we'll look into it. We'll look into it. But as with all these wavecasts, the same as I've been saying for the last 3 or 4 episodes, if you have questions for me, if you've got a trade that you did, or even if it was a simulated trade, a trade setup you thought was great and it didn't go your way, you got stopped out, anything, or maybe you did a trade and it was successful, anything you want to show me, you've got a chart ready for me, then now's your chance to show me, and I'll get it on screen and we can have a look, right? So this is a great opportunity. So if anyone's got anything they want to show me, and if you've forgotten or you haven't got anything this week, just remember it for next week. If you're looking at charts, if you come across something where you're like, man, I wish I could ask Andy this question, well, now's your chance. You can ask me right now. So, and if you're going through the course, whatever module that you're on, I mean, most of you are going through the course. I mean, all of you are going through the course at this stage. Everyone in the Wavecast at the moment is going through the course. And if you're stuck on something, right, you just can't get your head around this particular idea or this concept, whether it's Elliot's or Andrew's or anything else we've been talking about, then look, this is your chance to speak directly to me. So yeah, that's the same little thing I'm going to say every single week. Okay. So before I start, I want you guys to give me an emoji that best expresses how your Monday's going, how it's going, or depending on where you are in the world, how it has been if you're further east in the world, or how it's going if you're more over on the west side. I need to see at least 5 emojis, or I'm not going any further. I've got a 5 emoji requirement. Murray's having a cool day. Good stuff. Kaz is either having a boring day or she's very sleepy. Barry's happy. Good stuff. Need 2 more. Jeffrey's, I don't know what Jeffrey's doing. Jeffrey's just perving on people. Sweet. We've got Adam and Marcus. Right, we've got more than my 5 now, so we can get cracking. And Charlie and Tony. All right, good stuff. So we've got 15 people watching. Usually by the end of these streams, we've got about 20. And I am going to be, like I said last week, maybe you didn't catch the Wavecast last week. We are going to be kind of upgrading things, and this Wavecast show is going to be expanding into a King Silver crypto live stream show that's going to be going out onto Twitch and YouTube and all of the platforms. And it's going to be something that is going to be more regular than once a week, and there's going to be different segments. There's going to be the Wavecast segment. There's going to be other kind of cool things we're going to do, and yeah, we're getting all professional. Martin's I ordered a few bits and bobs that Martin brought over. One of them is the stream deck, so I'll be like loads of cool hotkeys I'll be able to do really easy without having to kind of go back into OBS, which is the streaming kind of software that I use. So it's going to be cool, man. I'm looking forward to it, but it's just a bit of technical stuff to set up, which is no problem because I'm a technical genius and never have any issues with anything technical. So that's not a problem for me. But now Martin's here for a week. He's not here for permanently, but he can help me maybe get things set up. We'll see how we go. All right, let's get into it. So let's load up. Let's go into good old TradingView. So I was actually kind of preparing this a little bit before the stream, and then I got distracted and I didn't finish preparing this. What I wanted to do was kind of get rid of all of these pitchforks and then slowly show, bring them on screen, one by one. And I'll do that now. I'll get rid of these so we can discuss them one by one. Because if you've got to the Andrews median lines part of the course, and you started to play with them, you started to experiment with them, you'll have discovered that at some point it gets pretty messy because you just like layers and layers of all these lines all over the place. And already we can see this starting to clear up really nicely. I think that's enough for now. We don't need the volume profile stuff. We can get rid of that. We don't need that as well. I can get rid of, just hide that as well. Yeah, I think we're good. We can just bring the volume, on balance volume down there. And I think we're good for now. So let me just, this is the daily, by the way. And I'm sure all of you who are also doing your charting, your wave counting, I think the reason why I think enjoy these is because you get to kind of compare what you've done to what I'm doing. You get to kind of compare notes. So let's just get rid of that for now. And this vertical line, by the way, I don't know if you guys remember this. This was the vertical line that told us the duration, the duration in time that, because we're in this bear market correction, right? That is the cycle wave 2 correction here, right? And you know that one of the high probability turnouts is that a correction is going to be longer in duration than the prior impulse wave that it's correcting. The prior impulse waves corrections within it. So that big impulse move, that's crypto, from crypto's inception all the way to the to 2022, right? That was like where it peaked. The corrections within that, wave 2 and 4 within that, the longest of those two waves in duration was wave 2, right? And that wave 2, the duration of that was this long from the peak of 2000. And if we get that time and move it along, and the beginning of that correction time-wise, if we place that on top of when this big bear market began, which was the end of 2022, I think so, right? It was back here. Sorry, the end of 2021, not the end of 2022. That's this year. So right here, right? So that's like, towards the end of sort of beginning of November, approximately 2021. If we place that marker right here, right, and then this line here, this duration from here to here, this is the length of wave 2. I'll show you. I was, just it's kind of good to know. Let's just tighten that up. Right. There we go. See this duration here? That's wave 2, really long, drawn out wave 2. And that duration is the same length that I've just sort of identified here, right? There to there. And that's so that when price, because I placed this here way back here, because I thought because I think people were thinking, oh, maybe this is the bottom down here or something, And it was like, well, I don't think that's the case, because there's a very high probability chance that this correction will take longer than this line, and that's turned out to be the case. I can't remember which Wavecast I said that on, but it was definitely on one of the Wavecasts. So if we zoom out, right, for those of you who've gotten to module 20, you'll know what these blue upward sloping lines are. This is the what I call the correction cymatics. It's the frequency. It's the harmonics. Actually, harmonics probably isn't the right word, but it's the frequency that I have found that price has been responding to beautifully all the way down this correction. I think that was it. Let me just get my, it's all the way down here. Okay, so I've kept that on. So that's the main one. That's the main one there, right? That's the main frequency. So price just responding beautifully to this line, comes down to the next line, responds beautifully, comes down to the next line, responds beautifully, and doesn't quite make it to this line down here. But it first came down to the, because I created the, you know, the halfway point and then the quarter points. So it came down perfectly to, you can see the quarter point there, and that's why I left it. But now we don't need that. We can just keep the main ones on. And price came very, very close to it, very, very close. Now, we don't need those at the moment. So I'm just get rid of those, make it nice and clean. So if we look at, this is just a regular pitchfork, right? Very beautiful, very clean. We've got some very, very clean, obvious pivot points. And then we've got our pitchfork, and price came down and pretty much touched the median line. Really, really nice. Came back up, didn't quite reach the upper parallel. But what's interesting, I don't think I've actually drawn this, but now I'm kind of seeing it, is because it didn't reach the end there. I would create, the first thing I would do is I'd create a sliding parallel. And there's a few things you can do with sliding parallels. Let's make it the right color. I believe that's the right color. So normally I'd label this as a sliding parallel, but I just want to show you quickly. There's a few things that sliding parallels can do. One is they can act as mirrors. And if we bring this down here, we can see like a really nice, not perfect, well, I mean, depends on, if I want to be zoomed in, but we're getting like an approximate mirror. Now that would be placed, I think, slightly lower, but you can see price came down and it formed this kind of smaller channel between the median line and the upper parallel. So that's something that I would have, you know, placed down there. If price would have broken down through and below this median line, well, then this is called a mirror, a mirrored sliding parallel. Then you'd create a what's called a phase shift sliding parallel, and it's called a phase shift because if you move that this way, you've shifted the frequency. And it's actually a term in whatever the study of frequencies and stuff is, but yeah, like it's the shift of the frequency, and you would place that on the other side. But price didn't go down below the median line, so we wouldn't need to do that phase shift. But just kind of spotted that, it's kind of interesting. Let's stick that inside our Wavecast folder, just stick it up there. And if you look at what price action has done, this is like literally since we jumped on together, price has exploded, and no one was expecting this. Price has exploded the outside of this this pitchfork, right, which is a very bullish sign, right? But that's not the only thing it's done. Let me just let's have a look. Let's grab this. Let's bring it to the front so I can just, again, put it in our little Wavecast folder here. I'm going to just turn this off for a second just to clean things up. And again, bring that down. Now, the last time we jumped on, after about half an hour or so, you know, TradingView started to get really jerky. We've got an extra computer that we're going to be running future live streams from, and that means this computer will be freed up. All the processing will be done by the other computer, and this will just be a feed that goes in, and then my TradingView will be silky and smooth as butter. It's not too bad now. It's not too bad, but it's a little bit jerky. But later on, in about half an hour, it's going to be pretty bad probably. So let me see if I can get the right pitchforks up. So the first thing we want to do is this is our correction, right? A, B, and then the C is just kind of drawing off sideways and downwards. So let me look for the right pitchfork. There we go. So this is a, I believe this is a shift. Yeah, this is a shift pitchfork. And we can see that price responded to this beautifully. It was such a beautiful, you know, showing us some beautiful market geometry. Price came down, blasted through the median line, came back, tested the median line twice, and then came back down and then touched the lower parallel. And then it changed direction, came to the median line, and then bounced off, and then it was kind of oscillating around the median line, broke through finally, came back down and tested the median line once more, and then it started to, you know, drift sideways, and then boom. And now look, it's exploded out the other side of this shift, right? Which is it's not like for the bears, it's not like a nail in the coffin, but it's a great bullish sign. What else have we got? I'll come to that one in a second. Actually, no, yeah, I'll start there. So as we start to zoom in now, so we know, again, I could layer these things on, right? But it starts to get a bit messy. So just know that we've broken out of our bearish median lines, and I'm going to bring these back later. Yeah, I'll bring these back later. There is a reason why I want to bring them up. So for now, let's just focus on the bullish geometry. And do you remember, if you were here on the last live stream, like on the stream, thanks to a question from might have been Jeffrey, I forget which one of you it was, decided that I think that we're in a flat correction, right? A correction A, correction B, and then a nice impulsive C, right? It makes sense. We've got running flats, right, where the B exceeds past the beginning of the A, and then we've got the, I think we're looking like a really nice running flat. That's my current, what I currently believe, and that shouldn't be that color. That should be like this, I believe. Boom. Almost. There we go. Okay. So we've got a nice A, a nice B, and C, and it's come up and found resistance right on the top of that corrective channel. Okay. But then let's look at this this pitchfork. This is a modified shift, right? You can see down here a modified shift. And as price was on, I mean, we would have done at the time, we would have done a regular pitchfork, and then we would have seen. I mean, you would have seen this on a previous previous Wavecast with the regular pitchfork. Looks like this. We saw that price came up and touched the median line beautifully, very, very nice, and then it broke down below and was hugging the bottom. And it's clearly okay. Price is not going in that direction, right? And then you play around with the shift, the modified shift, and in this case, the modified shift was perfect. Price hugged the, bounced off the bottom of the lower parallel and then just plunged below. And look where it found resistance. Look at the angle of its ascent. It's beautiful, beautiful market geometry. And hugging the lower parallel. And now as it climbed up, it broke through the lower parallel, and it well, not perfectly, but then it comes back down and almost retests the lower parallel. And then we're coming up to this resistance area right here, which is the back to the median line. Now we haven't hit the median line yet. I believe we will. And I'll show you why in a second. So that's like a pitchfork that, although we've broken down below, we've hit the first warning line. I'm keeping this on the chart because price seems to still be responding to it quite well. But now look at this, right? This is a pitchfork that I added today, right? This is using the same P1 anchor, right? The end of there, the same P2 anchor here, but rather than stopping here, well, price keeps falling down lower. So we've got a lower low down there, and look how beautiful this is. It's gorgeous, right? Price responds to this absolutely perfectly, right? And this would have given you two potential entry points. One, I mean, the touch there, the perfect entry is the second test, and that would have been such a beautiful entry down there. It's not perfect, but in the sense that actually no, yeah, because we've got a break of market structure here, coming back down the test, coming back up. So this would have been a really nice entry down here. And look at it, price just catapults straight to the median line, and that's where we are first. And look at this energy point, right? Look what, like, this median line is exactly where this this channel, the upper parallel of this channel. And as you might remember, channels are just modified shift. They're just modified shifts. So if I do this, boom, that's it. It's a modified shift. In fact, that just shows me that this actually isn't perfect. There we go. Boom. Right, that's all this is. This is a modified shift. So look at that energy point. This is such an amazing example of an energy point, right? You would have marked that, let's say down here, right? Price comes down here, you think, right, that's P3, and then you create the modified shift, or the, in this case, the it's just the channel, and then you do this beautiful pitchfork, and you would have created that energy point way down here, and look, price just blasted right into it, just sucked into it like a black hole. So that's cool. Now let's look at some. So this pitchfork is a modified shift as well, and this pitchfork is a base channel, right? Because we've got wave 1, wave 2, and this is just a corrective channel. A modified shift is just a corrective channel, but it gives you the the added probability of the median line, and then obviously with the base channel you can then add the warning lines if necessary. And so price is, again, the warning line. You can see here price came up and it's kind of like it bounced on the second warning line, came back down, retested the first warning line. It's beautiful. Came back up, and you can see the resistance on this third warning line. So it's all inside this this energy point. But just to keep things nice and clean, I'll just get rid of those for now. But if you think about this as a regular base, it's just a base channel, and I'm talking about with Kennedy's channeling technique. If you haven't got to module 12 of the course yet, it means that we might be looking, with a strong third wave like this, we might not get a fourth wave all the way down to here. But if we do the prophecy extension on the wave 1 here, look at that. Again, right into the energy zone. So I think that there is a chance that this wave 3 has completed, and now we've got our wave 4 to come. But I kind of feel like we've got another little pop-up in the wave 3, and we're actually in a lower degree wave 3 of wave 3. And I'll show that in a second. But before we go into the micro, I want to stay in this chart and show you what the idea is that I had. Let me see if there's anything else I want to show you. Yeah, when we were bearish, we were looking at this, and then you can see price. What I like about this pitchfork is how price shot down and just perfectly pinged off the lower parallel of this modified shift, and then I've kept it because again at the first warning line here, price oscillated. You can see like how these energy points kind of converge. Where are we? Oh, there we go. If I turn this one back on, you can see how there's like these zones, right? These zones where are areas where you want to be paying attention. But that's why I kept this one, even though price is now obviously screaming away from it. But because price responded to this so well, it's always good to kind of keep it around so you can come and check it out, right? And yeah, that's okay. That's all that is. Now, if we I'm going to keep that on, and this is when I'm going to bring my bearish geometry back. Boom and boom. So now we're getting some really nice geometry responding to these bullish pitchforks, and this white one I've got here is gorgeous, right? Price is just beautifully bounced off the lower parallel. It screamed and stopped where? On the median line, obviously. And so how does that play into the hypothesis that this is a running flat correction, and this is the end of the running flat correction? Well, look, if these are our downward sloping down geometry, and we've got some modified shift and the shift, and price is broken for the first time in a year. Price is broken up through them, right? Really, really strong with volume, more volume than we've had since July 2021, like relative volume anyway, on this indicator. It's a really strong sign. And there's people right now that are thinking this is the beginning of the bull run, right? That the bear market is over. I don't believe that's the case. I don't believe that's the case. I think this is the C leg of the fourth wave correction. And whether or not it's completed now, I don't think it is completed. I think we've got one more push up, a correction, one more push up, and that's going to complete. I mean, on the macro, on the daily chart. So it's looking like that this is not going to complete until like we've got another month, right, before we get the end of this correction. But then, if this is correct, if this hypothesis is correct, wouldn't you expect after a break, right? after a break, let me make this even thicker. Let's make this bright yellow. I don't know, right? And let's not make it dotted, just a straight line. Now, after you had a big break of this geometry for the first time in a year, what is going to happen? What's likely to happen? Is this likely? Just carries on, just to the moon, or do you think it's likely that we're going to come back and retest the geometry, which would do exactly what we would be expecting in a final fifth wave down? So that's what I think. If this plays out like this, that's what I think is going to happen. This doesn't feel like capitulation, which is the end, like the last crash, which I would expect to be the final move of the biggest correction the crypto space has ever seen. The big, like wave 2, the biggest move. That's what I think. I'm not seeing the end of a bear cycle there, and this is now the beginning. I'm not seeing it. I'm not psychic though. I'm not an omniscient god. So what do I know? Nothing. I don't know. I know nothing. All I have is the information that I am looking at, which really is this. And then on top of it, I'm doing my analysis in order to find some probabilistic edge. That's all we can ever hope for. But based on what I'm seeing about the difference between impulse waves and corrective waves, and the theory around the psychology of what causes a corrective wave versus a impulsive wave, this feels corrective. The structure of this feels like a running flat correction, and I think we're due a beautiful crash. I say beautiful. If you're an investor, you're not going to enjoy it at all. But if you are an investor, if this happens, amazing. You can get in at some cheap prices. You should want a big crash like this. But we've been saying for ages, we've been looking for a crash down to like 11,000, 12,000. Well, we'll see, man. I mean, if we get look, if this is wave 2, again, I always preface the way I describe my wave counts. If you hear me say, this is what's happening, this is what we're seeing, this is that might be a slip up. I try not to say this is a flat correction, we're in an impulse. I don't use that language because what the fuck do I know? I'm saying it looks like we're in a flat correction. It looks like, based on what I know, and look, this is the way that you can be a technical analyst and never be emotionally affected by what the market does, because you're not attaching your ego. You're not saying this is a flat correction, and then when it's not, being like, I'm shit, I fucked up. It's like, no, it looked like a flat correction, and then something else happened. Some new information emerged, and now it doesn't. Like, for example, so it looks like a flat correction, and if that's the and so if this is a wave 1, wave 2, this is a sharp and deep wave 2, which would mean we'd expect a shallow and longer duration wave 4. So if that's the case, the longer this wave 4 draws out, it moves this potential wave 5 potentially further out. Now, I'm not saying that we have to go and test like these geometry levels down here, but it would potentially mean a deeper wave 5, potentially. Pardon me. But we'll see. So that's the idea I wanted to share with you. But if price has broken above these key geometry lines, it makes complete sense that price would come back and test it, right? It would come back. The bears would want to bring this right back in, right, and bring the price back below 10,000 and keep on going down. Bring it back inside this bearish geometry. But the bulls would come in with force as soon as we get down to these, and retest, and that we'd find some support. And if we kind of make this less kind of steep, it doesn't look quite as scary, right? But it just makes sense to me that if we get, this kind of thing here, the final move down up. We've got to come back and test these test this bearish geometry. It makes sense to me. That's the idea I've got. That's my hypothesis. That's what I'm thinking, right? So let me just pop in the chat just to see what you guys are saying. Charlie saying, hello, Andy. I have a question. As wave counters, how do we know when the third cycle impulse wave has begun? We don't know. We never know. The wrong language. No one knows, right? Because as far as I can see, we still are in the fourth wave, aren't we? Sorry, my light is there's a poltergeist playing with my light. No, we don't know. But if you're listen to your language, like you're correct. You just said because as far as I can see, we're still in the fourth wave. Well, then yeah, according to your analysis, we're still in the fourth wave. Let me just turn that down a touch. There we go. Cool. Yeah. So according to your analysis and mine, that's fine. Mine is like playing around with the light. That's good. This isn't a technical problem. This was us just making the light perfect. Yeah. So according to your analysis, we're still in wave 4. Great. Well done. Right. I believe the same thing. But in order to answer your question seriously, when do we know we're in the third wave? We never know until it's too late. If you knew, you'd become a billionaire because you can just go all in on your trades because you know we're in wave 5. So get a £500,000 loan out if you've got the credit and just whack some loans in there because if you know something, then there's no risk management necessary. If I say, if you pick the right hand, you get £1 million, and you see me put something in this hand, but you've got to bet on something. You'll bet everything you have because you can see, the thing. So you never know anything. It's just about where's a high probability that we're in wave 3, and this is when you look for the confluence. There's all the things you've learned in the course for looking for a wave 3. It's the hardest thing. Not the hardest thing. The hardest wave to get into is a wave 1. But if you've got your corrective channel, right, for example, and you've got like an ABC correction and price breaks out out of the channel and then it comes back down and it's an impulse out, a correction back down, well, then that looks like a wave 1 and a wave 2. And then I start, and then does it come down? It comes down to sort of the Fibonacci levels, 1.618, and then look, getting into there's a module where I specifically talk about getting into wave 3s. It's not as easy as getting into a wave 5 because you haven't got the volume behind you showing you wave 3 essentially. So it's not, the earlier you try and get into a trade, obviously the harder it's going to be in terms of looking for that confluence. But that's the job of a trader. That's the job of an analyst. And this is why I love Andrew's median lines as well, because it's an extra layer of analysis that Edit Wave is about crowd psychology and Andrew's is about market geometry. So in our case, right, being very specific, if we are looking for look, this wave 3, look, you saw me on the live stream before. I didn't anticipate this wave 3. This wave 3 came out of nowhere. And the reason why I couldn't anticipate this wave 3 is because, look at this slow, gradual arc upwards, right? That is so unusual. Like this whole thing here, I wasn't thinking that's a wave 1 and wave 2. I thought this is all like a correction. I thought this was an A, B, and a C, right? And it just, I didn't catch this. I didn't catch it because this to me felt corrective. Although I've now, after the fact, after clearly, seeing a wave 3, I've now made this into a leading diagonal, which, if you remember from the leading diagonal module, it's the evil twin of the ending diagonal. I love ending diagonals. You can see them as they're forming. Leading diagonals, I never see them. It's always after the fact. Oh, okay, that's leading diagonal. Why? Because leading diagonal looks corrective, and it's going to appear when you'd be expecting a correction. So I didn't catch this, and because it was very unusual the way it kind of hugged to the bottom of this lower parallel and then slowly started climbing up, and it gave us nothing. Look at this. There was no pullback at all. There was nowhere to get in. So don't feel bad that you didn't catch this because I didn't catch it. There's the perfect scenario is you've got a correction down, and it's really beautiful. In you know, it's just you know, really perfect. Let's say it's something like this, right? And then we get there we go, and then we get a nice move up, and then we get this, and this is like obviously of a lower degree. And let's say this wave, what we think is wave one, has broken down. Let's say wave 1, 2, 3, 4, 5, and so this wave one has broken this market geometry, right? It's come up, because if we got like this, right, and it didn't break up above this market geometry, then you know it's kind of, you know, you haven't got any confirmation whatsoever that there's been a trend change. But this breaking out above this upside down, this would be the wave 4 of this C wave. It's telling us that, you know, this might be a sign that there's a change in direction. And you know, you've got like this nice, in this example, this nice clean correction, right? It's just, you know, this is like a textbook example with nice impulse down. It's bounced off the lower parallel of this parallel channel. We've got a break in market structure. Price comes back down, and let's say it stops at the 1.618 approximately. So we get like right. So we get down to the 1.618, and then we get, you know, like another move up, and this time it's potentially the wave one of the wave one. Let's get in a second. No, that's the wrong button. How did I get that nice blue one a second ago? Was it this one? Yeah, that's it. Cool. And then we get like a little wave one, and then you'd look at the subwave structure of this correction down here. Again, does it break market structure? Like, that's the thing you're looking for. And then you draw your base channel, let's say, and then you might want to think about, okay, well, if that's wave one of wave 3, then that's like a potential entry right there. And then you place your stop just below here. But then on top of that, you're going to be looking at your Andrews median line. Again, price might come up and hit that median line, come back down, hit the lower parallel, and you're going to factor all this in constantly. And then this one particular here, you're going to do, you might get a nice, that's not a regular, let's turn on the regular pitchfork. And then again, look, see this? Price might come back down, and it might perfectly test the lower parallel of this pitchfork at the same time as you thinking this might be the wave 1 and 2 of the wave 3. You see it all layers on top, and at some point you think, okay, everything I'm seeing, and then you're also looking at, like, you know, divergence, the momentum and the volume, and then at some point you go, I believe this looks like this is the wave 3, and I'm confident enough to put some money on the table, right? That's trading. Do I know this is wave 3? No, of course not. If you think you know, you're deluded, because how the fuck can you know? And that's when you get caught. That's when you get upset. That's when you fail, because you think you know and you don't. You don't know. And you could toss a coin, right? And you could be right 5 times in a row. Are you psychic? Do you know what side the coin's going to land on? No. You've just had a little bunch of, you know, it's going to happen. Probability. Every now and then you're going to get a bunch of, like, you're going to be right like 5 times in a row, 6 times in a row. It's not crazy, but it will happen. Does that mean you know what side the coin's going to land on? No. Right. So you have to look. This is the mindset of the probabilist. You never know. Sorry to go on a bit of a rant there, but it's kind of important to know. Just to keep reminding yourself, it's not about knowing. It's not about knowing. That is a holy grail you'll never find, because it's impossible to know. It's about layering on a confluence such that you arrive at a point where you go, it's looking like the probability is leading towards a wave 3, and then you manage your risk in case you're wrong. So you're making sure that the trade you're entering gives you at least a 3-to-1 reward to risk ratio. And if you're wrong, you're controlling how much you lose if you're wrong. But yeah, good question, Charlie. Barry says, why don't you add all the other parallels within the pitchfork instead of the sliding parallels? Why don't you add all the other parallels within the pitchfork instead of the sliding parallels? Well, oh, you mean like the warning lines and stuff like that? I mean, you can do 50%, 20%. Yeah, you can do. Like this is more like a personal choice. There's some Andrews, I don't know what you call them, Andrewsists, median lineists. I don't know. There's market geometry kind of people who use those halfway points, and some people don't. And I use them sometimes. As a default, I don't use them just to keep my charts clean. But then if price seems to it's like heading towards that midpoint, I might bring it up, But the sliding parallel is when you get price responding to somewhere that is not the 50% or the 25%. I mean, sometimes I'll put a sliding I'll just stick a sliding parallel on there, and then afterwards realize actually that's exactly the 50% point, or that's exactly the 0.25. But the sliding parallel is there because it's not an obvious point. Now, on the last live Q&A I did, I think it was Chris, I believe. I don't know if you're here, Chris. Chris was using Fibonacci levels, like 0.618 kind of levels and stuff. Now, I've played with that, and I've just it's not something I do. I don't really bother with that. But there's people who do. So hopefully that answers your question, Barry. Barry says not warning lines, more touch points. Yeah, 50%, 25%, 50%, 25% parallels. Yeah, those are the ones that are in between your lines, whether it's your median line, your upper and lower parallel. So between that would be like the 50% or the 25%, and then also between the upper and lower parallels. Sorry, the warning lines, like those in between points. That's what I'm talking about. So yeah, you can use those. But Barry says on what you have just said, it's okay. Okay, cool, nice, sweet. Adam says here is a Bitcoin trade I've done on Friday by drawing phase shift pitchforks and waiting for a breakout. Was it a profitable trade, or is it still live? Now, in order to get this on screen, we've got to just do something that's going to be a bit spazzy. I've got to quickly do this, and this is now inside my OBS, and now you can see you should be able to see. Let me just quickly check. Yeah. Okay. Great. So this is inside. My it's called OBS, the software. So just to fry your brain a little bit there. Okay. Cool. So let's have a look. So the sliding parallel. What are we looking at? So like, where's your median line and upper parallel and lower parallel? So I'm assuming this is the median line here, and this is the upper. That's the lower. No, this looks thicker. So maybe that's the median line. You might have to help me out a little bit, Adam. I can't see what line's what. Like which one's just. I'm assuming you mean that's the sliding parallel. Yeah, I'm going to go back to the chat quickly and just you can help me out with what's what. Beige is the regular pitchfork. Dark red is the phase shift. Beige is the regular. Dark is the phase shift. Actually, let me just copy this. Hey, my face. Okay. Whoa. Okay. There we go. Okay. Beige is the regular and the dark is the phase shift. Okay. I gotcha. Okay. Phase shift. So price. So at what point did you, I'm assuming, because price is going along this way, it's broken out above the upper parallel, but you haven't created this phase shift until, So price came back down and stopped here. So you created a line. Yeah, okay, that would have been the first sliding parallel there. You also might have want to put one there, but both of those were good. I mean, this one would have actually, like, you can see price would have done some interesting things to that sliding parallel there, but you placed it here. And then the next, like a phase shift would make sense, and price bounced off it twice beautifully, came back down, tested the sliding parallel, beautiful, came back up, tested the upper parallel, broke up through, blasted through your. So I'm assuming that, so price came up, and that was your the fact that it broke out for the first time after testing this. You thought, right, that's it. This is a breakout trade, and you place your stop loss inside the sliding parallel, and it obviously turned out great. So yeah, very nice trade. Very nice, very cool. So this is a great example where price just fails to break out of that sliding parallel, breaks down, tests the same sliding parallel, and then breaks out above, and it comes up with this strength. And I'm assuming you came in on this pullback down. I don't know what, if you're a breakout traders, they just trade the breakout. I'm not a breakout trader. I like to come and if I was going to trade this, I would have been looking for a pullback, and maybe I would have missed it. And breakout traders, they just get in, they just get it, and that's not my style. Hey, it worked out for you, very nice. And then your profit was the first. I'm assuming that's the first warning line. Happy days. Yeah, good stuff, man. Now let's just go back to OBS. Boom. Okay. Yeah, good stuff, Adam. Waiting for the pullback. Good stuff. Yeah, good stuff, Adam. So okay, so that's the macro of what I think is happening in Bitcoin. Let's go into let's zoom in a little bit. This is the daily. So let's fall in love. Let's bring the blue one. There we go. Bring that back. Okay. And do I want that one? Do I still want that one? It's not as useful. Okay. So I've got tabs open with all the time frames. This is the daily. Now I've got my 4 hour. I spend more time in the 4 hour than I do the daily. The daily is just like the zoom out, the macro, and I haven't prepared these at all. So these are just just everything's on the chart. But it's the same. It's no new pitchforks. It's all the same thing as there. And we can see that we've got what I have labeled here as wave 1, wave 2, and then we've got the lower degree wave 1, wave 2, which I think is the sub-minuet. It's the minuet. It's the minuet degree. And now we've got wave 3, and I've got my wave 3 ending here with the wave 4, and then now this is the final wave 5, right? And this is the trib-based extension with these 0.5, 0.160618, and I think we're going to head to the 1618 of this wave 5 of 3. So you can't see what's happening much here, but we've got a very down here. We've got a very sharp and quick wave 2, and so I'd be expecting a more drawn out wave 4 here. And if this was wave 3, I would just expect a bit of a sharper move, I think, for this higher degree wave 4. So I think we've got another push up. And if we go, this is the 4 hour time frame. We go down to the 30-minute time frame. Now the 30-minute, I believe, is, for me, again, this is me and my style, is my bread and butter. 30 minutes is like my comfort bubble. It's where I'm going to spend most of my time. So this is like my center state time frame. It's like my center point. And then when I go out, when I zoom out into the 4 hour, zoom out into the daily, and then come back to my center, which is the 30-minute. I was playing with the 20-minute for a while, but I'm sort of, do you know what? I'm actually happy really nicely with the 30-minute. And then if I want to go in deeper, I'll go to the 5-minute. And then you want to go super deep, go into the 1 minute, but then I'm going to come back out. So you want to make sure that, depending on your particular trading style, you want to have your center, right, where you are. Right, this is my comfort area, where it matches what the style that I feel comfortable with. And this might be too boring for you, too slow. You're like, no, man, I need to see some action. My home is the 1 minute, right? And if I want to get some detail, I go into the 30-second or the 5-second. If I want to zoom out, I zoom out to your half an hour. This isn't This is me zoomed out, man. You know, you're like a granddad. All good, man. And then you might be like a super long-term swing trader, position trader, and 30-minute might be you looking for your precise entries, but you like to spend your time in the 4-hour or the 12-hour, you know, and even the daily. Like, again, there's no right or wrong. Where's your center space? Where's your comfort area? And for me, it's the 30-minute. And so looking at this now, I was looking at this correction kind of form. Let me get rid of the volume profile to clean things up. So I was looking at this correction form, and you know, it's like, okay, well, is this the end of the correction? Again, nice and clean, beautiful, clean, impulse, correction, impulse, and also this is called the VWAP, and it's called an anchored VWAP. I'm going to be teaching you guys that later. But again, gave us some nice support, and again, it's all contained nicely within a channel. We've got some nice. When we get this, like these, the rejection wicks, there's a person that there's a post, what's it called when someone's dead? A posthumously, he's my posthumous mentor, someone that I admire greatly. He calls this separation when the price is pushed with strength away from, a level. It's a great indicator that the trend is likely to change. So yeah, beautiful. It's like, okay, well, is this now an impulse? Are we then looking at the next? Is this the beginning of the fifth wave? And it's something we're looking at. But then you can see this craziness going on over here. It's like, okay, no, this is still the correction going on. And I still need to keep playing with this. Is this so? In other words, I think we've got a correction down here. This is obviously a correction going back up. So I think we've got a W, an X. I'm not saying this is the completion of the X, although this does. Look at this. I've already placed these levels here in anticipation, and it's hit this level on the nose, absolutely on the nose, and it's also perfectly this blue Fibonacci levels is the WXY. So this is the trib based extension looking for the WXY, and you can see that if we zoom in a little bit, you can see that the 1 is the exact same level as this 0.88, and that 0.88 is really simple. It's just, this is the W wave and this is the retrace of the X, right? So this is a 0.88 retrace, which is a Fibonacci level of an X, and it's perfectly laid over the top of well, 100% is the Fibonacci number, but 100% of W. So W, X, and the Y is 100% the length of the W. That's quite cool. That's quite cool. So I'm going to get rid of these now. And that's sort of another Fibonacci confluence. That's kind of really, I think that's really cool. Let's just move that over here. And let's actually tidy this up a little bit. Let's make this a bit cleaner. In fact, I'm going to make it even cleaner than that. There we go. Look at that. Beautiful. Very cool. Now we've got a strong move down. So if this is a W and the X, that means we'd be expecting a Y wave down now. So we'd be expecting, is that an impulse? We'd have to go down into lower time frames to see, and then we get a correction up. And then, you know, if this is an impulse, then I would draw my my bait when the correction's kind of complete and I'm happy with it. I'll draw my base channel, and then if that was an impulse, then I'd be looking for third wave down, etc. But this might not be this might be a correction. So we've got another WXY. So this could be a WXY, and then we got, you know, another correction here, another correction here. That would form like a double combos within the Y wave. I'm not sure if that's making sense. If I talk fast about all these waves, sometimes it can sound a bit crazy. But anyway, other than we'd have to go down into lower time frames to see what. So yeah, that looks pretty impulsive, but I'm not seeing. I'm seeing more volume here than I'm seeing here. So this also could be a B, C within that. But either way, we're getting a retrace as we speak. So I'd put a Fibonacci level on here to see, just to watch the retrace, and we don't know whether this is a correction or an impulse. At least while we're talking now, we haven't got a lot of time to go into it. So I'm just going to just do that. There you go, and then we've got something just to keep an eye on. Keep an eye on that. And once we reach into these levels, is it a shorting opportunity? I mean, we're in a correction potentially, so it's not my favorite kind of trade in a complex correction like this. Because I mean, we've got like these levels up here to potentially come up to. So if you were to short this, you'd want to put the stop up here. But really, I would WXY. I mean, look, we're expecting an impulse up. So personally, I would just kind of wait for this to unfold in this time frame anyway. If you go down into lower time frames, then you can chop up and do all kinds of trading kung fu in these lower time frames. But me personally, because we're in a correction, and it's kind of like, it's kind of crazy when you're inside a correction, what's going to happen. Is this a W and an X, or is this a flat correction where the B is going to come up above this? We don't know. So for me, I'd want to wait to see this correction kind of unfold. And then if it does what I think it's going to do, where, we're coming up and we're going to get a move back down in the Y wave. And if this is the completion of the correction up here, like I've done, we haven't got any break of any kind of big market structure. That's the big market structure down here, right? You've seen me label market structure before, right? I've got my templates, so I would go lower. What would I say? That's a high. Yeah, it's a higher low. So we've got a higher low there. Right, and until price breaks down below this level, we haven't had a confirmation of a change in price action. So we've got a bearish, got lower lows, higher lows, lower lows. Even now, lower lows, lower highs, lower lows. Even this is a lower high, and then we've got a higher low. At the time, we wouldn't have realized this. A breakup. So now, okay, it's higher than this. We've got a higher high in the short term, but it's still a lower high relative to this move right here, to this market structure, which is key market structure. And look, price broke out above that level. It broke that market structure, which is a sign. Okay, maybe we're moving higher. And now, so far we're moving higher. And now we've got a. Let me just quickly label that as a lower high on the right, and that's why it's red, it's bearish. So price has broken out of it. Okay, fine. Now we've broken down, and now we've got also a higher low. So we've got 3 higher lows. So 2 high lows, right? So we've got a higher low. So far, everything is pointing to us going upwards. So if you're going to short this, because of this correction, it's a gamble, because there's no signs that we've got a change of direction. So personally, I wouldn't be shorting this. But I do think that, I mean, if this is complete, I really want it to complete, so it completes perfectly on these Fibonacci levels. But again, we're in a correction. Who knows? It could extend higher. We get like a flat correction. But what I'm seeing is, once we've completed this, what I think is the X wave, we're going to get a Y wave down, and that Y wave will, I think, complete this 4th wave, which I think is the 4th wave of the 3rd wave. And then we should get. Is that right? Let's have a look. Sorry. Yeah. So then that will complete then we'll get one more push up into. I don't think I've actually got that labeled. Yeah. So that'll be the 5th wave. Have I labeled? Maybe I've got my degrees wrong. Yeah, that is right. So we're in the 5th wave of the minuet. That's the minuet. Yes. Yeah, so we're still in the 5th wave of the minuet degree, and that's this one here, right? Yeah, that's the minuet. And so we have completed, I believe, the 3rd wave of the subminuet, which is that one there. And now we're in I believe, the subminuet, and which is the WXY in the micro degree. And I believe, so that's going to push down the fourth wave of the sub-minuet, and that's going to get a nice push up, and that could be a great long opportunity right there. And you can see here, this is the base channel I've created for the sub-minuet. So if we do get this X wave down to the base channel, that's what you really want to see in a fourth wave. You want to see it come back down and test that base channel. So as I talk about in fifth wave trades, then it's one extra level of confidence to help give you more confidence to get into that fifth wave. That could be a nice trade, and then that will take us up to complete that fifth wave, which will complete the third wave. And then after that, if this all plays out, then I'd be expecting a big drawn out fourth wave that could last a month. But who knows? What do I know? Nothing. I know nothing. I'm just a guy. I'm just a man with a beautiful head. That's all I am. So let me go back to the chat, and there's no chat. There's no questions. So I suppose that's it. So yeah, we've been going for an hour. So let's wrap it up there. So thanks for joining me on Wavecast 14. I don't know if we're going to be super set up with the cool setup and the stream deck and all kinds of cool stuff by next week. Maybe not. If not, it'll be just like this, same as normal, typical Wavecast. Barry says, any other tools on TradingView we can use other than fibs, channels, and pitchforks for predicting where price is going? There's 1,000 tools, but these are the ones I use. You know, I can only well, there's other things we are going to be going into, volume profile and things like that. But the most important things so far I've taught you. And like, if you're seeking more indicators, believing that more indicators is going to, like, the more you have, the closer it's going to get you to being 100% certain what's going to happen, it's a fallacy. It's not the case. If anything, it's going to confuse you, right? It's just about having a very specific strategy. What is your strategy? What are you looking for? And, I'm just one person teaching you what I know, what I like, what I enjoy, right? And that's the only thing I can do. But if you go into the indicators, there are hundreds of indicators. There's Bollinger Bands and Ichimoku clouds. There's so much, and they all work for some people. Like, some people love this indicator. Some people love squeeze momentum oscillators, and there's no right or wrong, and what I'm teaching you is what has worked for me, what I love, and once you have completed this course, and you have to wait until after you complete the course, you're free to go and experiment and try things, and you'll end up no doubt having something, a little twist on what I'm doing, or you use a little bit of this or some of this and some of this, and you've got to find what works for you. Like, trading is just about finding a edge that you enjoy, you like the way that you're doing it, and coupled with, obviously, like I'm teaching, coupled with the right approach to risk analysis, risk management. All you need is an edge. Hasn't got to be a crazy edge. Just an edge, appropriate risk management, and and you'll end up in the macro being consistently profitable. It's not like, look, you can trade. Let me show you something, right? Let me show you. Raphael says, what's the indicator on the right of your screen in purple? Yeah, that's also something called volume profile. It takes the entire price action within the screen, and it shows you where the price levels with the most volume is. I'm going to teach this. Don't worry. Like, don't be in such a rush to throw things in. If you don't feel like you've mastered what I've taught you already, you've got to just keep working on that. But it's all coming. Don't worry. But let me just, I'll just show you something. Like, when I first started trading crypto, I used to do the simplest thing, and it still, works. I think there's much more you should know, but I was just trading trend lines. That was it. And I teach you trend lines on, is it module 3? I think it's module 3. I teach you trend lines. So let me see if I can. I'll get like a really thick line just to kind of show you, right? And you can do this. This is like, I'm not teaching you this because I think there's more sophisticated way of doing it. But so let's say, look, the upper, this upper parallel, you could create this trend line here, right? And as soon as price breaks back down and tests this, now in this case it broke all the way back down, it wouldn't have been a good trade here. But if price then breaks out of the channel, let me find a good example where it would have been a good trade, where you would create a a trend line. So let's have a look. Obviously, we've got this huge move. In fact, I'm going to go away from my 30 minutes and go into my my 4 hours. So okay, so let's say we've got a nice just I'm giving you like a quick example, right? You could create a trend line right there, right? And there's probably a more sophisticated trend line you can create, right? There's as soon as price breaks out above this trend line, you could have gone long, and look at that. There you go, beautiful trade. Now, in hindsight, it's easy to create these beautiful trades. I'm just showing you, like, we've got an let me see, but that's not like a trend line. Okay, probably you could create a trend line here, although that's not really perfect. But let's say you created one there. There we go, right? You could go short as soon as it breaks down below this, and there's a beautiful trade there. Simple, no indicators, nothing, just trend lines. Let me show you another one. There we go, beautiful. So let's say you create a trend line. There you go, beautiful, nice, nice trend line there, approximately. And then price bounces off the trend line, breaks down below. Look, go short, go short. Obviously, it's not perfect all the time. You might have had a trend line there, let's say. It's not bad, but then price that breaks down below it, you go short. It's a fake out breakout, and then again, as long as you've got a stop loss, you think, well, I'm going to place my stop loss above here, whatever. You get caught out. So you could trade with just trend lines. That's what I used to do when I first started. Only trend lines. That was it. Nothing else. No volume, momentum, geometry, nothing. I just used trend lines, and I did okay. But I just wanted to learn more. I wanted to get more sophisticated. Because every trend line, not every trend line, but often trend lines actually are just the lower parallel of a channel or a pitchfork, and I want to be a bit more sophisticated with it. But that's what I'm saying. You don't need to just layer over like loads and loads of shit for the sake of it. Although you can if you want. So, all right, cool. So to wrap up, to close the Wavecast, I now want an emoji. I want at least 7 emojis. I've got more needy. I want 7 emojis that show me what you think of today's Wavecast. 7 emojis, or you can't leave. You're not allowed to leave unless I get 7 emojis. I want your emotion, deep emotion about how you feel about today's Wavecast. Or you can't leave. You can't leave unless you give me more these emotions, emoticons, emojis, whatever they're called. Kaz has stars inside her eyeballs. That must hurt. But it's good to see you, Kaz. You've been away for a while, so it's good to see you back. Raphael is applauding, so I'm going to bow. Thank you very much. Tony is in love with me, which is understandable given my beautiful head. Shaman's heart has turned purple, which I think he loves me so much. It's just like not good for the heart. Barry has gone mental. Adam is very interesting and curious. Yeah, good to see you back, Kaz. And Marcus is just I'm edible. I'm like an ice cream. Right, well that's my 7. 1, 2, 3, 4, 5, 6, 7. Great, wicked. You guys are now. I release you. And that concludes. Sorry, guys. When I was talking, I should have popped my face on like this. So yeah, I've got my 7 emojis. So I release you. You can leave now. And yeah, I'll see you guys in the community. And I'm calling the community now just quite simply the King Silver Network. The network. Like I said, if you saw the live stream last time, we're built. This community is built on software called Mighty Networks, and they refer to their communities as networks. And it makes total sense. So I'm going to do a poll at some point. It's not important right now, but I'm going to do a poll at some point asking which domain you think it would be coolest to have the King Silver Network. Right now it's on lions.kingsilver.com, but it's kind of a pain in the ass to say, hey, go to lions.kingsilver.com, because it's like wanting to use the kingsilver.com domain, but that's not, it's kind of forced. So do you think, and I'll do a poll, what do you guys think it should be on, given this is the King Silver Network, it should be kingsilver.net or kingsilver.network. I own both domains. So kingsilver.net Someone told me it sounds like a sort of a cheap 90s domain name. Or just head over to the King Silver Network, King Silver Network. I think that might work kind of better. So I'll do a little poll, see what you guys think. But yeah, that wraps up episode 14 of the Wavecast. I'll see you guys in the network.